Good morning, folks, and welcome back to Almus Market Mornings. Market consensus can be confusing. It's like the weather department forecasting for floods, the floods actually materializing, and the equities rallying because flooding, though bad, was forecasted. Now, I'm not saying that yesterday's CPI print was bad. Broadly, it was in line with what markets was forecasting, slightly elevated on the headline number. But the jobless claims had everyone's attention, reiterating the weakness in the labor market and reinforcing the change in the rate paths. Equities rallied, 10-year yields briefly dipped below 4%, and the dollar remained rangy. But interestingly, rupee hit new all-time lows against the dollar. There did not seem to be any support for the rupee, and not at least at this point of time. Good morning, JK. I think everyone of our listeners want to know what are the next possible levels for the rupee. I know it's far-fetched, but do you think even 90 figure is a possible scenario to be looked at?
Yeah, good morning, Swaraj. Yeah, I think rupee weakness anyway has been ongoing, and just that it is not a kind of big slide that we are seeing in the rupee. If you remember, 87.95 was hit somewhere early in the year. I think it was February. And now we breached that level, and we breached that level last month, and we breached that 88.30 yesterday, marginally by about 10-15 paisa. Uh, Weakness is totally on the cards because we are looking at the reduced exports due to tariff, and until we have some relief there, or if we are able to, find other destinations to replace those exports which are affected in US, this is going to be there. But I think in terms of level, it is also just going in a lower pace because dollar index is also weaker. So the more you go higher in USD INR with the dollar index remaining weak, you're also getting a undervalued rupee in terms of RER as well. So market is not too enthusiastic to go long and all that. But yes, as and when there are outflows, which is obviously dominating compared to the inflows, rupee weakens to fresh lows. That is what it was seen yesterday. We heard about a large amount of outflow on account of debt, and since there was no natural supply in the market, it breached the higher level, and of course at 88 50 levels, once again another level which people are watching. RBI stepped in, and in offshore market, of course, after a week US data, we saw some retracement, not marginal retracement, but we are again staying well above 88. To talk about 90, it's a bit too early because as I see it, again, it's going to be a gradual fall, and whenever we get any positive news on the trade, it can be a swift reversal as well. If it does not, it will be a gradual fall. Again, because of the dollar index itself being weak, I don't see. Looking at 90, it's difficult for me right now. 89 looks more reasonable for me. And also, don't forget that the premiums have also risen with all the fall in the US yields. So it's making more and more attractive for exporters to sell for forward. Like 1 year is now probably at 90 half plus. I think there will be some sort of interest increasing among exporters also as we go higher. Uh, for the global market, it was quite a surprise in the sense that while everyone was focusing on CPI number, the jolt came from the jobless claims, which actually rose by about 27,000 in the previous week to 2,63,000. This is the most rise in a single week since October 2021. And this actually confirms that the job market is weak. This trend can sustain for higher claims because as we shared in one of our earlier podcasts, the federal layoffs, uh, while they have been effective from 2-3 months back, those laid off people continue to get some compensatory payoff for some months or salary. And once that stops, that is when they start filing the claims. So that's the reason why you will see a sudden jump in the claims, as an effect of the layoff and unemployment resulting out of it. So in any case, job market, uh, we already had 2 week numbers in July and August for the monthly jobs report. There have been huge revision for the last 1 year between April 24 and March 25, as per the recent, revised numbers. It is weak, and it is actually overshadowed the CPI number, which came yesterday, which I would say CPI number was somewhat, stronger or rather higher. In the headline was obviously zero point 0.4 month on month versus zero point 0.3. Core was steady. But core zero point 0.3 also, if you strip out, if you go to three decimals, it was more towards 0.35 or, there is inflation, but the infusion of tariff related price pressure has been gradual. That is what we are seeing. So that means it can continue. Every month there can be steady increase as and when, the companies also start passing on the higher costs. It does look like, they are not passing on at once, because that can affect their sales. They also had built up inventory. So as and when the inventory reduces, old inventory, and also they pass on in a gradual way, the CPI will also reflect that. So inflation will be slightly rising gradually, and along with that, obviously the economy is also slowing down, and so we are actually getting a stagflationary situation in the US. So, oh, so that is not something that central bank would like to be presented with. In any case, these numbers yesterday do not change the expectation of rate cut by Fed of 0.25 when they meet next week. Some people obviously look, for an aggressive move. In fact, first time when Fed cut last year, the beginning of the cutting cycle, while market was expecting 0.25, they actually went for 0.5. So that's one precedent that which people are, quoting for a higher cut. But then I'm in the 0.25 cut, because Fed will be concerned about inflation creeping up slowly also. So they will take one measure at a time. Uh, and of course, speaking of central bank, we also had the ECB meeting yesterday. They kept the rates as unchanged as expected. Their forecasts indicate that, economy is going to do well. Inflation is going to be closer to 2.4%, and growth also is expected to be better next year. And in fact, ECB President Lagarde actually said that, disinflationary pressure is almost over. So they're actually indicating steadier policy, unless there is some fallout of, the trade deal between US and Europe, which they say is the fine print is actually not done yet. Therefore, there can be some fallout, and that can impact. If it impacts growth in eurozone, that can result in there. But otherwise, overall, as things stand, ECB is done with rate cuts, and US is beginning resuming its rate cuts. That's the scenario we have, which paves for actually to dollar to be weaker, because the differential in yield actually narrows down. But actually that is not the case what we are seeing right now, because dollar has been getting sold for quite some time now in anticipation of a weaker economy. And so we are not seeing much of a reaction to these numbers in the dollar. Actually, the fall or a dip in the dollar has been utilized by the market, and we are seeing some intermittent bounces in the dollar as well. So I think we are probably in a phase where we need some fresh trigger for the dollar to break through the previous lows. More consolidation in terms of time is what we should be looking at. Of course, we have had a sizable fall in the yields. Not long ago, 10-year was at 4.60, and we were below 4 yesterday, and that's a clear sign, where the market is putting their money, because even as stocks make new highs every day, you talk of overvaluation 6 months back, and markets are making new highs even after 6 months, almost every day. So that is the situation. So I think safe players are actually putting more money into, bonds now, because even gold, a lot of money has gone into it, perhaps bond is where people feel safer now. So I think to conclude, I think dollar is going to consolidate more. Not much of a data today, except for India CPI, where we can probably see a higher number like 1.55 was seen in July, and August can see about 2%. That is an expectation. If we eventually see further pressure on the inflation to the downside, either this month or next month, we should see next meeting. We should see a rate cut from RBI. This year, I think another rate cut on the cards from RBI as well. Thank you.
Thank you, JK. And I think just summarizing a few key points, the depreciation in rupee, it is gradual at the moment because we are also seeing the dollar index remaining weak. And if the dollar index continues to fall and the rupee continues to weaken against the dollar, it leads to an overvaluation situation, especially on the RER front. Fall in US yields has also resulted in the rise in forward payments, making it attractive for the exporters. So that's another incentive for the rupee depreciation to be a little bit more gradual. As of now, as JK mentioned, 90 seems a little far-fetched. 89 looks like a more likely level. And this scenario seems to be a little different from the past. JK, if I may borrow you once more for some more time, this situation seems very different from the past, right? Because in the past, we have seen rupee depreciate very sharply whenever it has made a new low against the dollar. This time it is depreciating very gradually.
It is very
Like the,
gradual. No, yes, it is very gradual, no doubt. Because I think one is market is not too convinced, to buy the dollar at these levels.
Mhm,
Uh, we see the up moves only when there are some outflows, bigger, large
mhm,
outflows.
mhm.
Of course, we have the central banks were looking at the market constantly. They don't intervene too frequently, but they are there always. Whenever there is an excess, they do come and If you remember back in February,
Mhm.
when dollar rupee hit new high at 87.95, there was a massive intervention of
Very much.
a rumored 5 to 6 billion, and dollar rupee dropped by nearly 1.5% at that point of time.
Correct.
So these are levels where people are not very comfortable. Yes, it is going to be depreciating, but based on flows and not based on speculative
Right.
tendencies.
So we
Yeah.
are not looking at a very runaway kind of situation.
No, I'm not looking
Mm.
at it. Yes. Yeah.
So yeah, folks, that was for the rupee. We look forward to the India CPI numbers, which will be out today. That will determine if there is any downward surprise, especially on the inflation front. We might get one more rate cut by the RBI this year. That's it from us today. Thank you for listening. Have a very good weekend. We'll catch up on Monday with the fresh round of updates.